Hey folks, welcome back to Ebro Trades. Today's video is pretty simple. We'll be covering the easiest draw on liquidity, how to use this to find your buyers for the day. It's going to be a quick video. This is something I've been using pretty heavily in my trading recently, so I thought it'd be probably the most useful video I've made so far. So we'll start off with the basics. What can a candle do? What are the three sort of types of behaviors for candles on the daily time frame? So I'm stressing this is all on the daily time frame. We'll start over here actually. So consolidation. So let's assume that candle one is Monday, candle two is Tuesday. In this case, Tuesday's candle was swallowed by Monday's candle. And what that means is we neither swept the high nor the low. We stayed within the range. We call this consolidation. Option two is that Tuesday's candle sweeps the high or sweeps the low of Monday's candle. And that essentially, in this case, this would be, bullish behavior. And if we swept the low, that'd be bearish behavior. And that is sweeping liquidity on just one side. Finally, we've got this one over here, and that is where Tuesday's candle swallows Monday's candle. And that essentially means that we sweep both the high and the low of the previous day's candle. Now, options one and options three are situations whereby this method that we're going to cover in this video can start to have a lot of nuance. We use, other confluences to help with establishing our bias. But for situations where we've got option two, so we've got behaviors whereby subsequent daily candles are sweeping highs or lows, so we're either in bullish trends or bearish trends, this method can be sort of pretty useful, and it's the one that I use. Second type of behaviors that I'd like to cover are reversals. One moment. Sorry about that. So, second type of behavior or behaviors I'd like to cover are reversals. So, reversals are a situation whereby so in this first instance, we've swept the previous day high. However, we have closed below previous day high. And by closed below, I mean that this part or the body of the candle closes below the high made by the previous day. And in this case, it's more probable than not that on the next day, so the Wednesday, we'll have a bearish candle fail to close above the previous day high. Um, the vice versa of that, or the opposite of that, is that in cases where we fail to close beneath the previous day low in a bearish trend, it is more probable than not that the next day will be bullish as we failed to close below the previous day low. And I hope that makes sense. So this is the converse of situation one. It's the opposite. And it's pretty logical. It's going to make a lot more sense with the examples that we're about to do. So don't stress, too much. But I do suggest you take notes. So if you've got a little notebook, perhaps use your laptop to take notes. Take notes on what I've just covered because it is really important. And then go and look for examples of this on the daily time frame in the markets. Let's head over to example one. All right. So example one, this is pound US dollar, GBP USD. We can see over here, so we're on the daily time frame. We can see that we're in a downtrend, or we've been in a downtrend for the past few weeks. You see, we're forming lower lows and lower highs. And we can see we've got a bearish candle over here. So this is on Thursday. Now, what we're going to do is we're going to mark out the low of this candle, which is over here. And considering the fact that we have broken this sequence of bullish candles and have formed a lower high, we're expecting the next candle to be a bearish candle. And we're expecting it to sweep this previous day low for Friday. So essentially, this is going to determine our daily draw on liquidity, this previous day low. And now we can look for an entry on the 5-minute time frame. And this is a trade that I took during the Asian session. which is from midnight UK time. So we can see over here that our low coincides with that point over there. So that's Thursday's low. And Asian session, if I'm not mistaken, starts around midnight, or at least that's when I log in to my TradingView account and start taking trades. So we're gonna speed past this section over here, and Friday has officially started. So what we're looking for right now is entries for a bearish trade. So we're looking for sells. So we're keeping our eyes peeled for potential retracements into fair value gaps. So we've got a fair value gap over here that looks interesting. Oh, yeah. This is way too dark. So let's change this to a much lighter color. Let's make this, that's more like it. So we've got a fair value gap there. We'll keep our eyes peeled. We've got a fair value gap over here as well. Let's see what happens. Oh, so this fair value gap is disrespected. So we can delete this fair value gap and essentially look for bearish fair value gaps that we can then retrace into. So we've got this fair value gap over here. This over here is a fair value gap. Let's see if this is respected. All right. Is it respected? Yes, that fair value gap is respected, and we've got a huge move down. And I presume a fair value gap will probably be formed in the process. Yeah, so we've got another fair value gap that's been formed over here. So now I'm just looking for an entry. Now I'm just looking for a retracement into this fair value gap, or if it's disrespected, into this fair value gap. That we could have taken a trade off of just this fair value gap, but I think it would have been slightly premature. So I'll be waiting for a retracement into this FVG over here. And then I will be taking a short position. All right, so will we tap in? Yep, and we've tapped in. Now we're just looking for a break of structure to the downside. And that would be sufficient confluence for a trade. So we see we've got a higher high, and a lower high. And on that note, that to me is a break of structure. So we can immediately look to short, aiming for the previous day low. Risk reward of 3 is healthy. Stop loss just above the fair value gap. So RR would be 2.5, which is plenty for me. And let's see how this plays out. Amazing. And we smashed TP. And that right there is a very, very simple setup. Daily time frame, the trend, find previous day high, previous day low, establish whether or not we think we will sweep or we will draw liquidity from the previous day high or the previous day low, depending on the market's trend, and use that to establish a bias for the day. In this case, it was bearish. Switch to the 5-minute time frame, pick a session or pick a kill zone, depending on sort of whether or not you follow ICT's kill zone hours, and look for an entry depending on the bias that you have decided. In this case, it was bearish. We found some fair value gaps. We waited for a retracement and a break of structure, and yeah, 2.55 risk reward, great trade. Let's move on to example 2. All right, so the second trade was one I took a couple of days later, and that was on again. So this was GBP USD. And I think this one was on Wednesday, the 6th of September, that I took this trade. So I could see that, again, we were still bearish on the daily time frame. We had this bearish candle over here that had swept the previous day's low. And so I was expecting another bearish candle since we've formed a lower high. So we were clearly in a downtrend. I was expecting for this Tuesday low to get swept, and that was my daily draw on liquidity. So I'll mark that out for you guys here. So this was my daily draw on liquidity. Again, super simple. Now it's just a matter of switching to the 5-minute time frame, staying patient, and looking for entries on the 5-minute time frame for sells. So for short positions. And this was a trade I took during London session. So switch to the 5-minute time frame. For the purpose of this video, I'm not looking at news and all of that sort of stuff, but you do have to remember that every day before I trade, I check for news. And if we've got important trading news, I do not trade for the day. I've got a whole video on that. Check it out. So Wednesday London session starts around 8 a.m. So we'd mark out London Open around 8 a.m. Now we can skip through all of this stuff because this was all, I was asleep. And now we're just looking for entries. Wait, yeah, so with that, London session has started. So now essentially I can mark out any fair value gaps. This is silver bullet hour for those that trade ICT. I'm looking for fair value gaps of relevance, so bearish fair value gaps that I could potentially retrace into for short positions. So we've got that fair value gap, we've got another fair value gap over here. So both of these are valid FVGs. My phone keeps going off for some reason. Don't you hate it when you don't pick up and they keep calling? Bro, I've not picked up the phone. That probably means I'm busy. I digress. So we've got both these fair value gaps marked up. Now let's see how price action pans out. Okay, so we violate this FVG, so we delete this, but this fair value gap is still intact. Now, what I'm looking for is we've switched to bullish here, so we've got a lower high, and we're probably going to form a higher high. I'm looking for a break of structure to the downside while respecting this FVG, and that to me would be sufficient confluence for a short position. All right, so we've not violated this fair value gap because we have not closed outside it. We've only wicked outside the FVG, so to me that's still respected. I'm now looking for an entry, and we've got a blue candle formed here. So that for me, a lower high is formed, break of structure to the downside off the fair value gap, short position, stop loss just outside the fair value gap. TP, my first take profit would probably be at 1, so 1 RR, and then move my stop loss to break even. But for now, we're just going to show the main take profit, which is the previous day low, just to show you guys how the previous day low is a great way to find your drawn liquidity. And let's see how price action plays out. Do we hit our take profit or not? So let's just press play here. Takes a while. So this is a trade I held onto, and there we go. We smashed take profit. Trade was taken at 8:45, and we closed out of the trade at 2:30. All within London session. Oh, it's happy days. And again, that is pretty much how to use. All right, we've lost the diagram, but that is how to use your daily draw and liquidity to find your bias for the day and take trades based off of that. I didn't use a lot of time frames. I didn't use any fancy PD areas. You do need to know you do need to know sort of what fair value gaps are, how to use those. I've got videos on that. But yeah, I hope this helped. Please like, subscribe, all that good stuff. Let me know if you've got any questions in the comments, and I will see you again in a few days with another video. Peace.